Inflation is down, but prices are up. What does this mean for your future? Because numbers are numbers, but all we really care about is, can we afford food next month or fuel next month? How does it affect my family? That's what we're going to be digging into today. All right, you guys, now we are nearing the end of September, and there are some big stories happening every day. This is why I want to come to you every single day. Look at this article today that we're looking at. Canada's inflation rate cools to 7%, but food prices are still climbing. This is a big issue, right? How can inflation be going down, but food prices be going up? So let's look at this article, you guys, and see what we can figure out from this. Now, the official inflation rate earlier this year hit 8.1% to everybody's horror. But if we continue on past that, I want you to go check out this article, cbc.ca. You can look at it. Canada's inflation rate cools to 7%. That's the article I want you to look at. It mentions there that Canada's inflation rate cooled to 7%, which means things are 7% more expensive than it was last August. But it says that it came down from its 40-year high in large part because gasoline got much cheaper this month, right? So this is nothing really to brag about, because what did Canada do? If the largest part of the reason why inflation went down is because gas prices came down, that's because of world events, not because of Canada's stellar behavior and how they're doing, right? If we removed gas out of the picture, the inflation rates have not done, the interest rates have not taken away inflation. Inflation is sticky. It is persistent. It will be sticking around, especially with negative yielding rates. All right, you guys, let's continue on. Let's get back into this article here. So the large part was gasoline got much cheaper. Okay. Again, not any part on the side of what the central banks are doing. Food prices continue to increase, keep going up. How much? If we look at the numbers, this is from August 2021 to August 2022. There's a really nice chart there. I don't actually believe this, but it says condiments are up 17%. I believe that. Bakery goods up 15%. I believe that. Non-alcoholic beverages up 14%. I believe that because I buy non-alcoholic beverages. I'm sure you do. Fresh fruit is up 13. I've noticed it being more than that. Sugar and confectionery 13.3. Fish and seafood 8.7. Dairy products 7%. Big question mark with that. I don't believe that. I'm paying way more than 7%. And meat only up 6.5%. This is where I start to get a little bit funky, okay, with this chart, because is it really only 6.5% for meat? I don't really believe that, to be honest with you, because when you think of beef, they are one of the biggest things that eat a lot of grain. Remember, grain is up 12, 13% for the year. But if beef eat all of this grain and all of this water and water shortages everywhere, my beef prices when I go to the store are way higher than 6% higher. I don't know what you're seeing. If you're seeing only 6.5%, leave me a comment below. I'd love to hear that. I'm seeing it go a lot greater than that. Okay, so if we jump back in, it says the cost of edible fats and oils is up 28%. So yeah, I've seen that. A lot of my olive oil and that, so on and so forth. While coffee and tea prices are up 13%, bakery products stand out at 13%. This is what you got to do. You got to do your own homework. Don't just believe this article saying that it's only up 6.5%. It's a lot higher than that. So if we go in and look at it, there's some arguments to and for which side. But if we look at the massive chart that is here, it kind of bounces between 2%, 3%. But then you just saw it take off during the pandemic to the absolute moon, right? Absolute moon. And it's come down a little drop just here. So all of this celebration is this tiny little drop that you see at the very end of the chart. That tiny little bump that it is going down. And it wasn't even because of raising interest rates. It was because of fuel that actually went down. So that is something we have to pay attention to. But at the same time, we're talking about food hurting us. What about houses, right? If we get into some of our other articles, you guys, we're going to see how there is more trouble coming, right? Canada's softer inflation drags down the loonie is an article from Bloomberg that it's dragging down the loonie because they want to see interest rates continue high, when we have low inflation, it is more favorable for the government not to raise rates. So they want to see rates go high and look good on the loonie. So the loonie is our dollar. It's going to take a bad hit as well. If we continue on, what is it doing to real estate? Real estate giant Compass, massive company in the US, laying off its tech employees. That's not good. Housing market is in real trouble. As we see in Toronto, we're noticing all kinds of mortgage brokers going out of business all over the place. Okay, so let's go to Zillow. Now, Zillow, famous company, you guys remember last year, this company, Zillow, was going under. Okay, it lost billions of dollars in their home transactions, and Open Door was losing 42% of its deals. It was losing money on. This is a big deal, right? Okay, so if we jump into the article, then home values will barely budge next year, says Zillow. Of course, they're going to say that, man. They want to sell you a lot of homes. Okay. So let's break down what these boys are saying. And even as I read it, I kind of have to laugh a little bit because they contradict each other. All right. So this is at money.com. Money.com. I want you to go check that out. Home values will barely budge next year, hardly even move. This is what they are claiming, but this is Zillow. Zillow is saying this. Remember, they're a private company that wants to sell you a home. Of course, those people want to sell you a home. If we go back and look at a lot of my videos, there are a lot of comments when I'm telling people, please don't consider buying this year. Put your buying off till next year. Wait. But at the same time, all the blowback I have online is realtors and mortgage brokers who are trying to get you to buy today because today is the best deal. Listen, I'm not interested in just one day getting one commission. That is ridiculous. As you know, I buy and sell real estate all the time, both as an investor, but I'm a real estate broker. But why would you ever not be defending your client's best interest? Blows my mind. So take everything you hear with a grain of salt, okay? This is just part of your education, you guys. So, all right, let's jump back in the article. Zillow is now predicting that home values will increase by 1.2% through now and August 2023. They're saying prices will go up. Are you not seeing the bloodbath that I'm seeing in real estate? Okay, that's ridiculous. It says the value of a typical home in the US was $356,000 in August because Zillow operates in the US. It is down 0.3%. Okay, as you guys know, in Toronto, prices of properties are down 25, 30, 40%. Okay. And it's saying, oh, the first decrease in home prices. I don't know what they're sniffing, but this is not the reality. The average fixed rate for a 30-year fixed rate surpassed 6% last year, according to Freddie Mac, which is more than double of the rate that it was last year. Okay. With the recent jump in sales, the monthly mortgage payment, listen to this. Okay. The monthly mortgage payment on a typical home has risen to $1,600. That's in the US. Nationwide. And listen, an 83% increase since August 2019, before the health crisis. 83% increase. I just want you to take that in for a second. If mortgage prices have gone up 83%, food prices are up 50% since 2019, fuel is to the moon, but wages are the same. Okay, they may be up 1%, 2%. How many of your friends have had massive bonuses? You know, it's not happening. So obviously, if the cost of everything goes up and your wage stays the same, people are getting squeezed, you know, really, really badly. And this is hurting a lot of people. Okay, so 83% increase in the cost of mortgages, which is shocking to me. So we have to be really, really careful, okay? Very, very careful. Now, if we go into Canada, Canada has a bank called Royal Bank of Canada that's also operating in the United States. If we look at them, they're saying, look it up on the star.com. You can look up the correction is far from over. RBC, Royal Bank of Canada, predicts a 14% home price decline by next spring. 14%. Isn't that interesting, you guys, that the company who's trying to sell you a home says home prices will not drop at all. All the realtors you see on TikTok, Instagram are saying now is the best time to buy, right? Don't worry, prices aren't going to go down. But the banks who are lending you the money are going, no, home prices will drop 14% by the spring. That's their guess as of today. Okay, so make sure you're going to see where this information is coming from before you make up your decisions, you guys. Okay, this is the problem. If you pull up a calculator, you can go to my website, Ruff Team Realty, ruffteamrealty.com if you want. My calculator here, if you notice, I put a $500,000 mortgage at 5% just to see what it was when I got my rates, back in November. 1.5%. It comes up to $1,975. $2,000. Today, the same $500,000 purchase, same percent down. The new payment is $3,015. $2,000 to $3,000 bucks, $1,000 more, 50% higher. Now, my question to you is, have you gotten a 50% raise? If fuel is up 50% and food is up 50% and my mortgage payment is up 50% and my wage hasn't moved, how is this possible? You're going farther and farther and farther into debt. And I got to tell you this, I know I'm repeating myself, but everybody that I speak to has no plan, none. I talk to them and they're like, I got 2 months of spare. I have 4 months of spare time, 5 months of spare time. It depends on who you talk to, what financial advisor they're like. I have 3 months emergency fund, 6 months emergency fund. The greatest people have 12 months of emergency fund. But what happens when all of your emergency funds run out? What happens? Then we're going to be into some serious doo-doo, right? Everybody is going to be. So this is where I say that financial education is the biggest key. Financial literacy, non-stop learning. Just go right away and pick up some books and start reading about it. I always say Rich Dad, Poor Dad is a great place to start. For those of you who are on TikTok, you can follow me. I have a list of my top 10 books that I think that you should read to get yourself going, right? I've been reading a book a week for 20 years, all right? I've tried to read 3 hours a day to try to protect myself. There is going to be some serious trouble. Here is what I think is going to happen, just from me, for whatever it means. I really think that the Fed will be forced to pivot. We will have a sovereign debt crisis. Not just Canada, not just the United States, not the EU, not just Japan, all of them, because they were all printing money at the same rate. As they all print money at the same rate, remember, if one of them behaved badly, they would have collapsed before the health crisis. But because they all printed at the same time and the whole globe is tied together, they've all been floating still. So you know what? We have to diversify ourselves away from the system that's going to collapse. So there will be a collapse. How will it be rearranged afterward? I'm not really sure. That's why we keep calling it the Bretton Woods 3.0, because Bretton Woods before is 1945. After the Second World War, the whole world was broke. Then we figured out the way that we have right now. The US is going to be the king of the currency of the planet, right? That's what we decided after the Second World War. So now, will we have a new understanding? Will it be a new Fed coin, Canada coin, all like blockchain type money? Maybe. We're going to have to see what's going to come. The BRICS countries like Brazil and Russia and India, they all want to get together, and China, and build a new reserve currency based on commodities. Will that happen? Let's see. It's going to be an epic battle over the next couple of years over control of your money. That's what's going to be coming. So we have to be able to make moves right now, you guys, and see how it is. Now, I know that theoretically everybody wants to go on Bitcoin, but remember, the country's strength is their being able to control the money, the monetary supply. There is no country that doesn't have their own monopoly, and there's no country that wants to give up that monopoly for no reason. So the idea that Bitcoin is the whole world will go down and Bitcoin will take over everything is not going to happen. But it still doesn't mean that I don't believe in Bitcoin. I've been mining Bitcoin since 2013. So you have to diversify your portfolio and be careful. Listen, home prices will be going down a lot more. I suspect that the rates for the rest of this year will go up at least twice, 0.75, at least 2 more times. So if the interest rates keep going up, we're going to keep losing on home prices. So 0.75 is what I would expect. That's 1.5%. That means your home will drop another 15% in value. Remember, over time, it keeps hurting. You ever get punched in the arm or go and exercise really hard one day? You're like, man, that was hard. It's not over. Remember the pain that comes 2 days after? How your muscles all seize up? It's kind of that way with the economy. When they do this initial shock, all that it affects is new buyers in the market. but the real hurt, the real pain hasn't come yet for the market. That can take 12 months, 18 months, 24 months for the full effect to come in. That's kind of like that muscle soreness after the gym. It takes some time. So the real damage of this isn't going to come for a while. I expect the home prices will continue to get hurt. The stock market will continue to get hurt until the Fed will be forced, arm behind their back, to pivot and pause their rates and maybe even slow that down. But I don't think that will come until next spring. A lot can happen with the war and so on and so forth. A lot can happen between now and then. So stay tuned. We're going to try to get into that more and more. Listen, you guys, I'm always here for your health, wealth, and happiness. I want you to do well. I want you to succeed. And I don't want you to get squashed like a bug. I think that the system is designed so that every 5 to 7 years, it flushes out those people who have too much debt and who are over leveraged. It's been that way for thousands of years. So this is how I want you to just try to protect yourself. Education is key. Keep on going down that road. Keep educating yourself. Be careful. Don't be buying any homes right now. I wouldn't be doing that, but be ready and prepared. Maybe getting your lines of credit ready. Maybe getting approved for mortgages, because there will be a time where there's mass capitulation in the market. Prices will really go down, and then you could buy some really good deals. Remember, the downtimes are only bad for those who are not prepared. If you are prepared, you're going to love it. It's going to be the best time ever, because that one downturn can take you from working minimum wage to being financially free if you play it the right way. And I want you to stick with me right through this downturn until we recover. And hopefully a lot of you are going to break free. All right. I wish you guys the very best. Please remember to like, follow, and subscribe to this. It helps me so much. I really appreciate it. I'll talk to you soon. Thanks so much for sticking around. If you like that video, you might like this one and maybe something like that.